Question 1. Which of the following best describes the concept of subrogation in insurance claims handling? A. Subrogation is the process by which an insurer compensates the policyholder for their loss and seeks reimbursement from the at-fault party's insurer. B. Subrogation refers to the insurer's right to settle a claim directly with the policyholder, bypassing legal procedures. C. Subrogation occurs when the policyholder is compensated without the insurer seeking to recover any of the payout from a third party. D. Subrogation is when the insurer assumes responsibility for the policyholder's liability claims without further investigation. Answer A. Explanation. Subrogation is a principle in insurance that allows an insurer to step into the shoes of the insured after paying a claim and pursue recovery from the third party responsible for the loss. This helps insurers recover the amount they have paid to the policyholder under the insurance policy. It's a key mechanism in protecting the insurer's financial interests. Options B, C, and D are incorrect because they do not describe the actual process of subrogation. Option B refers to direct settlements but does not involve the pursuit of third-party recovery. Option C incorrectly suggests no recovery is sought, which is contrary to subrogation. Option D is also inaccurate, as subrogation typically involves investigation to determine fault and it doesn't necessarily assume responsibility without investigation. Question 2. Scenario-based question. Mr. Allen, a homeowner in Maryland, has filed a claim for water damage caused by a burst pipe in his kitchen. The insurance policy he holds covers water damage caused by accidental events. However, the adjuster discovers that the burst pipe was due to neglect in maintaining the plumbing system. Which of the following actions is most likely to be taken by the insurer? A. The insurer will fully cover the water damage claim as accidental events are covered under the policy. B. The insurer will deny the claim based on the evidence of neglect, which is considered maintenance-related damage. C. The insurer will offer a partial payment based on the actual cash value of the property and wait for further documentation. D. The insurer will refer the claim to the Maryland Department of Insurance for a ruling on whether maintenance neglect affects coverage. Answer B. Explanation. In this scenario, the damage was caused by neglect, which typically falls outside the scope of coverage for most standard homeowners insurance policies. While water damage is covered when it results from an accidental event, neglecting to maintain the plumbing system would be considered a form of maintenance failure, which is excluded from coverage. Most homeowners policies contain provisions that exclude damages caused by wear and tear or neglect. Option A is incorrect because neglect is not usually covered under an insurance policy for accidental events. Option C suggests a partial payment, which would not apply to a claim that is outright denied. Option D is not necessary unless there is a dispute over the interpretation of the policy, but in this case, the adjuster can make the decision without external referral based on clear policy exclusions. Question 3. What is the primary purpose of the Maryland Department of Insurance MIA in the context of claims adjusting? A. The MIA manages and oversees the financial solvency of insurance companies to ensure they can pay out claims. B. The MIA provides direct claim settlements for policyholders when disputes arise between insurers and claimants. C. The MIA licenses insurance adjusters and ensures they follow ethical guidelines and industry standards. D. The MIA negotiates settlements on behalf of policyholders in cases of disputed claims. Answer C. Explanation. The Maryland Department of Insurance MIA is responsible for licensing and regulating insurance adjusters within the state. The MIA ensures that adjusters are adhering to ethical guidelines, professional standards, and applicable regulations. This includes making sure adjusters have the necessary training and qualifications to handle claims effectively and fairly. Option A refers to the role of the MIA in overseeing insurance companies, but the MIA's primary focus in this context is on the adjusters themselves. Option B and D both imply that the MIA gets involved directly in the claims settlement process, but the MIA's role is more regulatory than active involvement in individual claims settlements. The MIA enforces laws and ensures that adjusters follow proper procedures rather than engaging in negotiations or settlements directly. Question 4. Which of the following is true regarding the consideration element of an insurance contract in Maryland? A. Consideration refers to the mutual exchange of promises between the insurer and the policyholder, where the insurer promises to pay a claim and the policyholder promises to pay the premium. B. Consideration refers only to the premium paid by the policyholder at the time of policy issuance. C. Consideration refers to the insurer's obligation to provide coverage in exchange for the policyholder's waiver of certain rights. D. Consideration is the specific clause in the policy that defines the amount of coverage provided for different types of losses. Answer A. Explanation. Consideration in an insurance contract refers to the exchange of something of value between the insurer and the insured. In the context of insurance, the insurer agrees to provide coverage and pay claims when valid, and the policyholder agrees to pay premiums in return for that coverage. This mutual exchange of promises constitutes the consideration element in the contract. Option B is incorrect because consideration includes both the payment of premiums by the policyholder and the promises made by the insurer to provide coverage, not just the premium. Option C refers to a waiver of rights, which is not the focus of consideration. Option D describes coverage definitions, which are part of the terms of the contract but not related to consideration. Question 5. When adjusting a commercial property claim for fire damage, which of the following factors is most important in determining the actual cash value (SCV) of the damaged property? A. The market value of the property at the time of the fire, including potential future appreciation. B. The original purchase price of the property without considering depreciation. C. The replacement cost of the damaged property minus depreciation to determine its actual cash value. D. The insurer's willingness to pay based on the business's financial situation and potential loss of income. Answer C. Explanation. When determining the actual cash value (SCV) for damaged commercial property, the replacement cost is typically calculated and then depreciation is subtracted to account for the loss in value over time. This method ensures that the business is compensated for the depreciated value of the property rather than its original purchase price. Option A is incorrect because market value includes factors such as future appreciation, which does not apply to ACV calculations. Option B overlooks depreciation, which is a key component in calculating ACV. Option D is incorrect because the financial situation of the business does not influence the calculation of ACV. The focus is on the property's replacement value minus depreciation. Question 6. Which of the following is most likely to trigger a claims-made policy for a liability insurance policyholder? A. A claim is made against the policyholder for an event that occurred during the policy period, but the claim is reported after the policy period ends. B. A claim is made against the policyholder for an event that occurred after the policy period ends but is reported during the policy period. C. A claim is made against the policyholder for an event that occurred before the policy period begins and is reported during the policy period. D. A claim is made against the policyholder for an event that occurred during the policy period and is reported during the policy period. Answer D. Explanation. A claims-made policy provides coverage only for claims made during the policy period, and the event must have occurred during the policy period as well. This type of policy is common in professional liability insurance where the timing of the claim is critical. Option A is incorrect because a claims-made policy requires the claim to be reported during the policy period, not after. Option B is incorrect because the event must have occurred during the policy period for the claim to be covered under a claims-made policy. Option C describes a claims-made policy inaccurately as it's not typically covered when the event occurred before the policy period. Question 7. Scenario-based question. Imus Rodriguez, a commercial property owner in Maryland, files a claim for property damage caused by a storm. The insurance policy covers wind and hail damage but excludes flooding. After further investigation, the adjuster discovers that the storm's flooding was the primary cause of the damage, though wind and hail contributed as well. How should the insurance adjuster handle the claim? A. The insurer should deny the entire claim, as flooding is explicitly excluded under the policy. B. The insurer should only pay for the damage caused by wind and hail, as those elements are covered under the policy. C. The insurer should pay the entire claim, as both wind, hail, and flood caused the damage. D. The insurer should deny the claim and refer it to the Maryland Department of Insurance for a ruling on flood exclusions. Answer B. Explanation. In this case, the insurance policy excludes flooding but covers wind and hail damage. Since the flooding is not covered, the insurer should only compensate for the damage caused by the wind and hail, not the flooding. When dealing with claims that involve multiple causes, insurers generally only cover the aspects that are included under the policy. Option A is incorrect because while flooding is excluded, wind and hail are covered and the claim should not be denied in its entirety. Option C is incorrect because it ignores the policy's explicit exclusion of flooding. Option D is unnecessary since the adjuster can determine the proper course of action based on the policy's terms and exclusions. Question 8. Which of the following is a primary function of an insurance adjuster when investigating a claim? A. To represent the policyholder's interests and negotiate directly with the insurer for higher payouts. B. To provide legal counsel to both parties involved in a claim, ensuring compliance with all laws. C. To evaluate the claim, gather evidence, and determine the validity of the claim in accordance with the insurance policy. D. To settle claims on behalf of the insurance company without the need for investigation or documentation. Answer: C. Explanation. The primary function of an insurance adjuster is to evaluate the claim, gather relevant evidence, and determine whether the claim is valid according to the terms of the insurance policy. The adjuster assesses damages, interviews witnesses, and reviews documentation to ensure the policyholder's claim meets the policy requirements for coverage. Option A is incorrect because the adjuster represents the insurer, not the policyholder, and cannot negotiate directly on the policyholder's behalf for higher payouts. Option B is incorrect because providing legal counsel is outside the scope of the adjuster's role, which focuses on claims handling. Option D is incorrect because settling claims without investigation would be unprofessional and potentially fraudulent. Question 9. What is the primary legal purpose of the Fair Claims Handling Practices requirement for insurance adjusters in Maryland? A. To ensure insurers are making a profit by minimizing claim payouts. B. To guarantee that adjusters act impartially, promptly, and efficiently in resolving claims to avoid delays and unfair treatment. C. To ensure that adjusters are loyal to their clients and represent their interests over the insurer's interests. D. To allow insurers to deny claims without justification, reducing the cost of premiums for policyholders. Answer: B. Explanation. The Fair Claims Handling Practices requirement ensures that insurance adjusters treat all claims impartially, promptly, and efficiently. It is designed to prevent delays, unfair treatment, and discrimination in claims settlements. This regulation upholds the rights of the policyholder by requiring adjusters to handle claims in good faith and with due diligence. Option A is incorrect because the purpose of fair claims handling is to protect policyholders, not to maximize insurer profits by reducing payouts. Option C is incorrect because while adjusters must be fair, they represent the interests of the insurer. Option D is incorrect because fair claims handling requires justifiable claims decisions based on policy terms, not arbitrary denials. Question 10. Which of the following best describes an insurable interest in the context of a life insurance policy? A. A person's financial interest in the death of another, such as a beneficiary's interest in a policyholder's life. B. A person's relationship with a property, such as ownership or financial stake, which is affected by the property's loss. C. A person's emotional interest in a policyholder's well-being influencing their eligibility for coverage. D. A person's personal benefit derived from the policyholder's continued good health. Answer: B. Explanation. Insurable interest refers to a person's financial stake in a property or life that could be impacted by its loss. In life insurance, this means that the policyholder must have a legitimate financial interest in the continued life of the insured, such as a spouse, child, or business partner. The purpose is to prevent gambling on someone's life or property. Option A is incorrect because it misrepresents insurable interest as solely related to the death benefit, not the financial impact. Option C is incorrect as insurable interest is based on financial, not emotional factors. Option D is incorrect because it does not describe a direct financial stake in the insured's life or property. Question 11. Which of the following statements is true regarding the coinsurance clause in property insurance policies? A. Coinsurance requires the insured to pay a percentage of the property value if it is not insured to the full value. B. Coinsurance does not affect the amount of coverage provided in a policy, only the premium cost. C. Coinsurance only applies to policies covering property losses caused by theft or vandalism. D. Coinsurance protects the insurer by requiring the insured to cover a portion of the loss, even if the insured amount is underinsured. Answer: A. Explanation. Coinsurance is a clause that requires the insured to maintain a certain percentage of the property's value, typically 80%, 90%, or 100% as coverage. If the property is underinsured, the insured will have to cover a portion of the loss. For example, if the property is only insured for 50% of its value, the policyholder will bear part of the cost of the claim based on the coinsurance percentage. Option B is incorrect because coinsurance does affect coverage, not just premium costs. Option C is incorrect because coinsurance applies to all types of property policies, not just those covering theft or vandalism. Option D is misleading because coinsurance is about the insured's requirement to maintain coverage, not the insurer's protection. Question 12. Which of the following best describes a deductible ECA property insurance policy? A. The amount an insurer must pay to repair or replace the insured property before the policyholder pays any portion of the claim. B. The amount the policyholder must pay out of pocket before the insurance company pays for covered losses. C. The portion of the premium paid by the policyholder to ensure the policy is active. D. The percentage of the claim the insurer will pay after the policyholder has paid the deductible. Answer B. Explanation. A deductible is the amount the policyholder must pay out of pocket before the insurance company will cover the remaining costs of a claim. This helps reduce the number of small claims, which can reduce premiums for all policyholders. Option A is incorrect because it describes the opposite of a deductible, confusing the deductible with the insurer's payment. Option C describes the premium, not the deductible. Option D is inaccurate, as the deductible is the policyholder's responsibility before the insurer pays, not after. Question 13. Which of the following best defines underwriting in the context of insurance? A. The process of evaluating an insurance claim to determine the validity and amount of coverage. B. The process of setting the price of an insurance policy based on the risk of loss. C. The process by which an insurer calculates the total premium income needed to cover potential claims. D. The process of distributing insurance policies to agents and brokers for sale. Answer B. Explanation. Underwriting refers to the process by which an insurer assesses the risks associated with a potential policyholder and sets the terms, conditions, and premiums based on those risks. The goal of underwriting is to ensure the insurer is not taking on too much risk for a given premium. Option A is incorrect because evaluating claims is part of claims management, not underwriting. Option C is incorrect because pricing is part of underwriting but does not fully describe the process. Option D is incorrect as underwriting focuses on evaluating risk, not distribution. Question 14. In Maryland, which of the following is a requirement for an insurance producer to maintain their license? A. The producer must complete continuing education courses every 2 years. B. The producer must renew their license every 5 years and pass an exam. C. The producer must have a high school diploma to qualify for license renewal. D. The producer must submit proof of business income annually to the Maryland Department of Insurance. Answer A. Explanation. In Maryland, insurance producers are required to complete continuing education courses every 2 years to maintain their license. These courses are designed to ensure that producers stay current on laws, regulations, and industry standards. Option B is incorrect because while producers must renew their license, they do not need to pass an exam for renewal. Option C is incorrect because a high school diploma is not a requirement for license renewal. Option D is incorrect as income reporting is not a requirement for license renewal. Question 15. Which of the following would be covered under a standard homeowner's insurance policy? A. Flood damage caused by a natural disaster. B. Fire damage caused by a cooking accident in the kitchen. C. Damage to the home caused by an earthquake. D. Theft of personal property from an unoccupied home. Answer B. Explanation. A standard homeowner's insurance policy typically covers fire damage, including fire caused by cooking accidents. However, certain exclusions apply to specific types of damage, such as floods and earthquakes, unless the policyholder has purchased additional coverage for those risks. Option A is incorrect because flood damage is typically not covered under a standard homeowner's policy and requires separate flood insurance. Option C is incorrect because earthquake damage is also excluded under standard policies and requires separate coverage. Option D is incorrect because theft may be excluded if the home is unoccupied for a certain period without proper notification or precautions. Question 16. What is a beneficiary in the context of life insurance? A. The person or entity who purchases the life insurance policy. B. The person who is named in the policy to receive the death benefit when the insured passes away. C. The life insurance company that issues the policy. D. The person responsible for paying premiums on the policy. Answer B. Explanation. A beneficiary is the person or entity designated in a life insurance policy to receive the death benefit when the insured person passes away. The beneficiary could be a family member, friend, trust, or charity. Option A is incorrect because the policyholder purchases the policy, not the beneficiary. Option C is incorrect because the insurance company is the issuer of the policy, not the beneficiary. Option D is incorrect because the policyholder typically pays the premiums, not the beneficiary. Question 17. Which of the following is an example of an exclusion in an insurance policy? A. A policyholder's home insurance policy excludes damage from earthquakes. B. A policyholder's life insurance policy includes coverage for death by natural causes. C. A policyholder's health insurance policy covers all medical expenses related to car accidents. D. A policyholder's auto insurance policy covers damage to their vehicle from any type of accident. Answer A. Explanation. An exclusion in an insurance policy refers to specific risks or events that are not covered under the policy. In this case, damage from earthquakes is excluded in many homeowners' insurance policies unless additional coverage is purchased. Option B is incorrect because natural causes of death are typically covered under life insurance policies unless otherwise specified. Option C is incorrect because while health insurance may cover car accident-related medical costs, it is not a general exclusion. Option D is incorrect because a policy may exclude certain types of accidents or circumstances, such as damage from an accident caused by the driver's negligence. Question 18. Under the principle of utmost good faith in insurance, which of the following is required from the insured? A. The insured must disclose all material facts to the insurer even if they are not specifically requested. B. The insured must trust the insurer to act in the best interest of the policyholder. C. The insured must agree to the insurer's final decision regarding claims without objection. D. The insured must provide accurate information only if the insurer directly asks for it. Answer A. Explanation. The principle of utmost good faith requires that both parties in an insurance contract, the insurer and insured, act with honesty and full disclosure. Specifically, the insured must disclose all material facts related to the policy even if the insurer does not directly ask for them. Material facts are those that could influence the insurer's decision to provide coverage or determine the premium. Option B is incorrect because the insured does not have to trust the insurer's actions, but rather must provide honest and complete information. Option C is incorrect as the insured is not required to agree without objection. Rather, they must disclose all relevant information truthfully. Option D is incorrect because the insured is expected to volunteer all material facts, not just respond to direct questions. Question 19. Which of the following is an example of a moral hazard in insurance? A. A person intentionally sets fire to their house to collect the insurance payout. B. A driver crashes their car due to a slippery road and bad weather. C. A homeowner fails to install a security system and experiences a break-in. D. A business claims loss of income after natural disaster destroys its property. Answer A. Explanation. A moral hazard occurs when an insured person acts in a way that increases the likelihood of a loss because they do not bear the full consequences of the loss. In this case, setting fire to a house to collect an insurance payout is an example of intentional fraudulent behavior motivated by the expectation of benefiting from insurance. Option B is incorrect because it describes an accidental situation, not one influenced by the insured's moral behavior. Option C is a physical hazard as it involves failing to take preventive action, but not a deliberate act. Option D is an example of a valid claim due to a natural disaster, not a moral hazard. Question 20. What does the pro rata clause in an insurance policy specify? A. The method used to calculate the premiums based on the insured's risk profile. B. The way in which a claim will be paid if the insurance coverage is shared with another insurer. C. The percentage of losses the insured is responsible for in the event of a claim. D. The amount the insurer will pay for losses after deductibles are applied. Answer B. Explanation. The pro rata clause defines how the insurer will divide the payment for a claim when more than one insurance policy covers the same loss. The insurer pays a proportionate share of the loss based on the coverage provided by each policy. This clause ensures that multiple insurers share the financial responsibility fairly. Option A is incorrect because the pro rata clause is about claims, not premiums. Option C is incorrect as it describes a concept related to deductibles or coinsurance, not the division of responsibility between insurers. Option D is incorrect because it refers to loss payment after deductibles, which is unrelated to the pro rata clause. Question 21. Which of the following is a key difference between actual cash value and replacement cost coverage in property insurance? A. ACV covers the cost to repair or replace property without depreciation, while replacement cost includes depreciation. B. ACV covers the value of the property at the time of the loss, while replacement cost covers the cost to replace the property with new items of similar kind and quality. C. ACV is used only for auto insurance, while replacement cost is used for homeowners insurance. D. ACV is based on the current market value, while replacement cost is based on the original cost of the property. Answer B. Explanation. Actual cash value (SCV) takes depreciation into account when determining the payout, which means it provides the value of the property at the time of the loss, factoring in its age and wear. In contrast, replacement cost covers the cost to replace the damaged property with new items of similar kind and quality without factoring in depreciation. Option A is incorrect because a CV includes depreciation, not replacement cost. Option C is incorrect because both a CV and replacement cost can apply to a variety of insurance types, including auto and home. Option D is misleading as it suggests a different basis for valuation that doesn't accurately describe either a CV or replacement cost. Question 22. Which of the following is an example of an open perils policy? A. A policy that covers all risks except those specifically excluded. B. A policy that only covers named perils explicitly stated in the policy. C. A policy that provides coverage for specific risks like fire, theft, and vandalism. D. A policy that provides no coverage for risks unless the insurer specifically accepts them. Answer A. Explanation. An open perils policy, also known as an all risks policy, provides coverage for all risks except those explicitly excluded in the policy. This type of policy offers broader protection compared to a named perils policy, which only covers specific risks listed in the policy. Option B is incorrect because it describes a named perils policy, not an open perils policy. Option C is a specific example of named perils, not open perils. Option D is incorrect because it describes a restrictive policy which does not align with the broader coverage of an open perils policy. Question 23. Which of the following is a key responsibility of an insurance broker? A. To act as an intermediary between the insured and the insurance company, providing advice and policy options. B. To set premiums for the policies they sell. C. To adjust claims after an incident occurs. D. To manage an insurance company's finances and risk portfolio. Answer A. Explanation. An insurance broker acts as an intermediary between the insured and the insurance company. They help clients find the best insurance coverage by comparing policies and offering advice based on the client's needs. Brokers typically represent multiple insurance companies and are not tied to one insurer. Option B is incorrect because brokers do not set premiums. This is done by the insurance companies. Option C is incorrect as adjusting claims is typically the role of an insurance adjuster, not a broker. Option D is incorrect because managing an insurance company's finances is the role of actuaries and company executives, not brokers. Question 24. Which of the following best describes subrogation in insurance? A. The process by which the insured party is reimbursed for a claim without paying a deductible. B. The process by which an insurer seeks reimbursement from a third party responsible for a loss after paying the claim. C. The process of determining whether a claim should be paid under a policy. D. The process by which an insurer reduces the amount of coverage in a policy. Answer B. Explanation. Subrogation is the legal process by which an insurer, after paying a claim to the policyholder, seeks reimbursement from the responsible third party or their insurer. This helps insurers recover some of the costs of the claim and ensures that the party at fault bears the financial responsibility. Option A is incorrect because it does not describe subrogation. Option C is incorrect because determining claims is part of claims management, not subrogation. Option D is unrelated to subrogation, which does not involve altering coverage amounts. Question 25. What is the primary purpose of a loss prevention in property insurance? A. To provide financial compensation for damages that have already occurred. B. To reduce the likelihood of a loss occurring by implementing preventive measures. C. To increase the amount of coverage provided in a policy. D. To provide compensation for legal fees resulting from property-related lawsuits. Answer B. Explanation. Loss prevention refers to the actions taken by policyholders or insurers to reduce the risk of loss or damage to property. This can include measures such as installing fire alarms, security systems, or conducting regular maintenance to avoid accidents. The goal is to prevent losses from happening in the first place. Option A is incorrect because providing compensation is the role of claims payment, not loss prevention. Option C is incorrect because loss prevention does not directly impact coverage limits. Option D is incorrect because legal fees are not the focus of loss prevention. Question 26. Which of the following best describes the deductible in an insurance policy? A. The amount the insurer pays before the insured is responsible for any costs. B. The amount the insured pays out of pocket before the insurer begins to pay for a claim. C. The portion of the claim that is paid by the third party. D. The total amount the insurer will cover in a policy. Answer. B. Explanation. The deductible is the amount the insured must pay out of pocket before the insurance company begins to pay for a claim. It reduces the insurer's exposure by requiring the policyholder to share in the loss. Option A is incorrect because it describes the opposite, where the insurer would pay first. Option C is incorrect because third-party payments refer to subrogation, not deductibles. Option D refers to the policy limit, not the deductible. Question 27. Which of the following is considered a hazard in insurance terms? A. A fire that causes damage to property. B. A property that is located in a flood zone. C. A policyholder who has a history of multiple claims. D. A business owner who refuses to install fire alarms. Answer. D. Explanation. A hazard in insurance terms refers to a condition that increases the likelihood or severity of a loss. A business owner's refusal to install fire alarms creates a higher risk of fire damage, making it a hazard. Option A is incorrect because a fire is a peril, not a hazard. Option B is a location-related risk but not a hazard itself. Option C refers to a moral hazard but not a general hazard as defined in risk management. Question 20. What is the primary purpose of underwriting in the insurance industry? A. To decide whether or not to issue a policy and at what terms. B. To advertise and promote insurance policies to potential customers. C. To adjust claims after a loss occurs. D. To manage the investment portfolio of an insurance company. Answer. A. Explanation. Underwriting is the process used by insurers to evaluate the risks of insuring a person or entity and to determine the terms and conditions of the policy. The underwriter assesses factors such as the applicant's health, property condition, or driving history to make decisions about coverage and premiums. Option B is incorrect because marketing and advertising is separate from underwriting. Option C is incorrect as claims adjustment is a different function. Option D is incorrect because managing investments is done by actuaries or investment professionals, not underwriters. Question 29. What does coverage limit refer to in an insurance policy? A. The maximum amount the insured will pay for premiums over the life of the policy. B. The amount the insurer will pay for covered losses up to a specified amount. C. The minimum amount of coverage required by law. D. The number of claims an insured can file within a policy period. Answer. B. Explanation. The coverage limit is the maximum amount the insurance company will pay for a covered loss under a policy. Once the limit is reached, the insured must cover any additional expenses. Option A is incorrect because the coverage limit refers to payout amounts, not premium amounts. Option C is incorrect because minimum coverage requirements are dictated by law, not the insurance policy itself. Option D is incorrect as the number of claims is not directly tied to the coverage limit. Question 30. Which of the following is an example of contributory negligence? A. A driver runs a red light and causes an accident, but the other driver was speeding. B. A person slips on an icy sidewalk but had been wearing inappropriate shoes for the conditions. C. A homeowner fails to fix a broken fence that causes injury to a visitor. D. An insured intentionally causes damage to their property to collect an insurance payout. Answer. B. Explanation. Contributory negligence occurs when the injured party contributes to the cause of the injury through their own actions. In this case, wearing inappropriate shoes for icy conditions is a form of contributory negligence that reduces or eliminates the responsibility of the other party in the event of a claim. Option A involves a shared fault situation but is more of a comparative negligence issue, not contributory negligence. Option C is a case of negligence but not contributory negligence. Option D is an example of fraud, not negligence.